Well, thanks for joining, Cullen. So today we're going to talk about timely payments in public procurement and why I think it's important that it really be considered a procurement issue and not just something that happens over in finance. And so you're going to join me in that conversation today. I got to know you about a month and a half ago, and you have a really interesting story. And then you've been working on some solutions to some of those issues, which we'll hold to the end. But why don't you introduce yourself and some of your experience that makes you be interested in being involved in this conversation?
Yeah, for sure. Thanks, Dustin. Yeah, my name's Cullen Gallagher. I'm with a company called Lunch. My background actually started off in the public sector as much as you can be. I was in the military. I flew C-17s in the Air Force. I left active duty in 2012 and then kind of started an entrepreneurial journey. My first company was an AI company. We sold software into colleges mostly. Helped college athletic departments clip highlights from their sporting events automatically. So basically taught a computer how to watch sports, automatically clip the highlights. And this is where kind of I first saw some of the issues around procurement, right? Selling to public colleges, long sales cycles. But then even after you'd completed the sale, completed delivery, there was also sometimes long payment processes. It felt like every college had a slightly different process around payment. And so it was difficult as a small business to navigate that, figure out which forms they needed, what format they needed, who you needed to speak to in order to get the payment processed. And so a lot of times it could take a number of months before you got paid. I didn't think a ton about that problem, just figured it kind of went with the territory. And then in 2020, I moved over to a company called Play Versus, which was an esports company working primarily with high schools. And I saw the exact same problem again. We had more than 60% of our revenue was sitting in AR and just not really moving. And we were working with thousands of high schools at that point. So we began reaching out to all of these different high schools, and I sort of noticed a similar issue that the payment processes were delayed. And again, it makes sense. Each of the regulations are different in different municipalities with different school districts. There's different things that they need to do. And so as a vendor, that became very difficult to manage. So I looked around and I tried to figure out who had solved this problem before. And I called other companies when I couldn't find solutions. And I said, hey, do you have problems with AR from school districts or public universities or municipalities? And overwhelmingly, the answer was yes. Everyone says yes. Getting paid is very difficult. And then so we started to investigate the problem a little bit more and speak to the municipalities, the finance offices, and understand why that is. And it makes sense. They have a lot of regulations because they don't want to waste taxpayer dollars. They want to make sure that when they are releasing funds to a vendor that has completed work, that they are doing that correctly. And that when audit season comes around, they're not going to run into any trouble. So we started to understand that and really wanted to solve that main problem.
And my perspective on this has many levels as well. We work with procurement shops who are trying to work through several issues overall on having the procurement function be a strategic asset. Where are the handoffs between procurement and finance? What is a procurement responsibility versus a finance responsibility? So on the level of workers to help procurement officers optimize their organizations, we deal with that issue. One of our clients it's well known that one of the issues that has affected them is late payments or payments that get lost in the system and don't have the right triggers. And it does have a lot of impact on reputation and on it has direct impact back on procurement. So what I thought was interesting about this conversation is really like, where is some of the responsibility and why is procurement not just an observer, but somebody who should be an active participant in it? And then the final layer is, of course, we're a small business, we're self-funded. And so cash flow is, of course, a thing that affects us. And we spend a lot of time on both making sure that the invoices that we present are in a way that they can be paid, which is important on us to understand what has to be presented so that it is properly acceptable, and then being able to put effort towards making sure that things that are hanging as potential energy turn into kinetic energy at some point and actually appear so that people can be paid. So I think it is important to sit and talk about it in this kind of a confine. So what have you seen as far as, what are some of the ways that some people may say, oh, well, the big firms like the Grangers and the Fastenals, they have a whole bunch of money, and so they'll get paid eventually. And so, it'll just come. I'm sure if a Granger or Fastenal representative is listening to this, they may take significant issue with saying that they don't have as much. But certainly for small businesses and local businesses who we say repeatedly, we want to target to be participants in the procurement process, and we want to expand the number of small and local and diverse businesses that are able to participate. Cash flow is a really big deal. And so what we do there and how we act there has direct effect on the actual meeting of the policies that we say in terms of how we deal with those people. What has been your experience with that?
Yeah, 100%. A lot of the things you're speaking to are things that I have lived personally. We came from the vendor point of view, right? And so I remember there was a very specific point in time, we're a small business, we're doing, $30,000 or $40,000 in revenue a month. And we had a payroll that was around $35,000, $40,000 a month. So anytime payment was delayed, we ended up paying payroll out of our own wallets, the founders of that company. And that's really difficult. And it has these other effects. I spoke to, probably a few dozen companies before we started this one and asking about their issues with getting paid, after making delivery. And I spoke to a couple companies that said, look, we don't actually sell to government agencies anymore. And they were, a scholastic company, and they just started selling direct to the parents. And one of the big issues with that is, and I said, why? They're like, look, the procure to pay process is just really onerous. It's really difficult. It's hard to manage, and it takes a long time. And it was difficult for us to manage our cash flow. So we just started selling direct to the parents. But there's a couple of sort of second order effects that happen with that, is that now instead of every child in the school getting access to this scholastic technology, only the kids whose parents can afford it have that. And so you start to see separation again based on economics of those families. So it contributes to that sort of that inequality of outcomes. The other thing you mentioned that I think is really important is that about half of the spending that we've seen through our platform is going to small businesses. It's not going to the Grangers. It's not going to the to the large like Anthology or any of those companies. It's going to A to Z fencing company, and it's going to local businesses all over the country. And if it's difficult for those local businesses to work with your municipality, it means you're just going to functionally get less. You're going to get less opportunity. And so we've talked to a number of municipalities that have small business quotas, DEI quotas, and they're unable to hit them, and they're unable to convince the businesses that they should work with the municipality. And so if you're a municipality, number one, you're not hitting your quotas on small, local, diverse businesses. But number two, it's also limiting the amount of choice that you have. So, you're trying to procure things for your city, and you're going to the same people over and over and over again because they have figured out this process. And so they kind of have a lot of pricing power in that scenario because they know that you've bought from them for the last 10 or 20 years. You're going to continue to buy from them. If the procurement system is more efficient, if vendors can be paid easier, more vendors are going to come to your municipality and say, look, we can offer a better price or a better product. And essentially those tax dollars can be used more efficiently and get more bang for your buck. And so we think by improving this process, it's ultimately going to improve everything the citizens of these municipalities are getting, right? Like when you're purchasing, even things as big as construction projects down to books for the local library, we think you can get better deals if you can encourage more businesses to want to work with your municipality.
And it's excuse me. And it's possible that some people may say, well, does that really happen? I can tell you there's a large city that we work for where the fact that it's been known that that issue existed and is being worked through gainfully and aggressively, but then it affects things as varied as willingness to bid on new work, willingness to make hotels available for certain types of like potentially police witnesses or so forth, because it's become part of the relationship, and then it atrophies the relationship and it affects the ability to do it. I wrote an article in the run up to this where I listed off seven reasons why I thought this particular topic is not simply something that should be thought of as, oh, well, that's a finance issue and that's an AR issue, but that the procurement officer needs to be aware of it. And the first two things in there were enhancing reputation for future solicitations. So making it clear that government should be a partner of choice and that government is a good business to do business with, and then preserving supplier relationships. So I wrote consistently paying vendors on time fosters trust and strengthens long-term relationships and makes them more willing to consider changes or adjustments in the spirit of partnership when such changes may be needed. So if government needs something to be changed in the nature of a relationship, we've curried good relationship with that supplier by being a good partner in the first place. So we have more capacity to actually keep our powder dry on requests when such requests may need to be made if we have come at the relationship from a spirit of partnership. But delivering work and then having to really pull and pull and pull to get paid for the work, it strains the relationship. Are you hearing that those kind of experiences from people who have been working with you on some of your platform?
Yeah, that's exactly what it is. The great thing for us is people come onto our platform and they say, we're able to help them pull revenue forward. And they say, I can actually take more work with the city, or I can take more work outside of that. So, by being a part of the solution on the procurement and payment process, you're actually like fostering the development of the small businesses in your community. Again, because when you think about it from a vendor's perspective, they might have to buy supplies and pay for labor before they make delivery. And then they've put out a bunch of capital, and now they're waiting to get paid back before they can do that. And literally a lot of the small businesses on our platform are sole proprietorships. It's one person that is doing this for their job, and they are doing a cash outlay every single time they're supplying something to their municipality. And so they have to wait until they get paid before they can take another job. And that's really, really difficult. And so, we've seen that affect vendors. And so, when they come to us and we're able to help them with that, they're able to take more jobs. And for us, that's again, we think by improving sort of the municipal, in the municipality, the procurement office and payment office relationship with their suppliers, with their vendors, we think it's better for everybody. We think ultimately they're going to get better execution at the municipality, but then also the vendors are going to do better and be able to grow their businesses. So, we're really encouraged by sort of the early signs that we've seen, the anecdotes that come in, the reviews that come in from these small businesses. And hopefully we can bring that wider to a wider audience and do this across the country.
I'll make a quick aside, because one of the comments that we can see, first of all, I'll restate, we are live. And so if anybody has a question they'd like to ask, feel free to drop it in. For those of you who are watching this on recording, it answers Keith's question, which is this being recorded? The answer is yes. So as soon as we end, it'll be available on demand at the same link. I will also convert this into a podcast and I'll put it out on the podcast. So it's kind of the best of both worlds. It's live, but then it's immediately also available on demand. Okay, so now coming back into the topic. So picking up on what you said there, two other parts in the article that I talked about were sustaining vendor cash flow. So timely payments ensures that vendors maintain healthy cash flow, which lets them cover their costs. It's ironic that, of course, we do things in solicitations like try to probe for financial stability. But the number one way we can create financial stability in our vendors is allow them to meet their obligations. So if a vendor is having to carry, carry over a long period of time, it means that they have trouble with meeting some of their contractual commitments. So it is very important, and it's very respectful to be able to do that. Yeah, another one that I had in here that is similar was minimizing supply chain disruptions. So late payments can disrupt the supply chain, leading to shortages, production delays, and potential interruptions, and a lower willingness of vendors to maintain needed stock. So if I'm having to buy stock ahead in order to support a project, that's a large capital outlay that I had to make in order to support the project. But then if I feel like the process of getting paid, it's extending past what would be reasonable to anticipate, then I'm less likely to buy and hold the stock in anticipation of the need of the project, because I'm having to protect myself and protect my staff. And so our ability to pay timely has a direct effect on the ability of the supplier to supply the good or service that we contracted with them in the first place, especially if it's a small business that has to maintain stock and inventory in order to provide for the work.
Yeah, that's the first thing it affects, right? Normally, you want to have some supply on hand. Obviously, it's expensive for businesses to maintain a ton of inventory, but if they're able to maintain cash flow and maintain stocks of whatever widgets they might be selling, the goods or services, they can actually get to delivery faster. And so it has these sort of this sort of chain of effects that happen, all dependent upon the payment. And I think what I've seen from municipalities is really encouraging. I think a lot of people are trying to get from sort of a separate bucket of procurement and a separate bucket of payment to a more full procure to pay system, which is really encouraging. And I think that's like one of those solutions, kind of combining those functions. Getting the payment natively in your procurement platform, those types of things can make it quick. And then also, I think I've seen some really interesting stuff from these procurement services, these platforms that are helping streamline either vendor onboarding or streamlining, some of the payment routing and things like that. I think we're going to continue to see that over the next 5 to 10 years, with these platforms that the municipalities are already using, starting to incorporate workflow automations, approval automations, or approval routing automations, and then payments directly in the platform. And I think all of that's going to help, and hopefully we can play a small role in that. But generally, what I've seen, it's interesting because being a vendor and having been a vendor into municipalities for so long, there is a little bit of a divide, unfortunately. You start to, over many years, have a really good relationship with the cities and the schools and everybody that you work with, but initially there's a bit of a divide. And I think the key is working together, finding the solutions that work for both parties. And I think we can sort of remove some of the acrimony from some of the situations. I'm sure a lot of people that are listening in or watching this have fielded angry calls from frustrated vendors trying to get paid. But at the same time, I think one of the things the vendors, one of the things I had to learn as a vendor in that space, was there's a lot of really good reasons why the systems in place are the way that they are. And it is around, making sure that we're not wasting taxpayer dollars, right? No fraud, waste, or abuse. And so I think that, now that I've gotten further into this issue and talked to a number of finance offices across the country, I have a lot more understanding of why things are the way that they are. But still, I'm very optimistic that there's going to be an opportunity to make it better for everyone involved in these transactions. I think ultimately, like a switch to digital payments, we see 90% paper check payments on our platform. I think simply a switch to digital payments is better for everyone, right? The 5 days that the check is sitting in the mail, and then the 3 days that it has to take to clear, that's gone. It just shows up in your bank account as a vendor. On the procurement side, you've now got a digital ledger of all your transactions. So when it comes time for audit, everything's laid out right there. You're not scraping together, W-9s and purchase orders and receipts. Like, it's all sitting there in one spot. So I think, that move that we're starting to see across the country of people moving to digital payments is really going to help with this issue. And hopefully it makes it easier for everyone once audit time comes around. I think that's the other big thing that I didn't realize as a vendor, is that a lot of these school districts, a lot of these municipalities are literally getting audited every single year. and it, it can take a month or up to 3 months. And so, making sure that we have a digital transaction record of all of these things, I think actually helps everyone in a lot of different ways. And so hopefully saving people time and headache as they're getting ready for audit on a yearly basis.
So let's talk. I'll talk a little bit about some of the invoice hygiene things that I think need to be in place, which is almost kind of a structural commitment to doing it well. And I'll share some of my own experience related to it, because one of the other things I talked about in the article is mitigating legal and regulatory risks. Because of course, some people who may be listening to this will say, well, I'm required to pay it within 30 days or whatever, so I have prompt pay requirements. And there tend to be certain requirements on when things are going to be paid. In my experience, there are definitely times where people just get overwhelmed, and just the raw walk-in causes delay. But as much or more, what I've seen in terms of like our personal experience with payment delay, it's been, well, it was in system 1, but I need it in system 2. So clock restarts, right? Or, oh, that wasn't received. Can you resubmit, right? Or the style of the invoice that we submitted wasn't the way that they expected it. So then it needed to be resubmitted, which then again resets clocks. So one thing that we've done, both in our own practice and that we're advising procurement shops to do, is when you have new customers, don't just connect the project team to the project team, connect the finance team and the finance team as a core part of the relationship, because simply having good conversation and absolute clarity as far as what needs to be submitted in what format to whom with what checkpoint, it'll reduce a huge amount of the not intentional, but it has the same effect of delay, of things not having gotten to the right place or haven't gotten to the right person or in the right format, that can take what otherwise would be a 30-day payment and make it a 60-day or a 90-day. And then once invoicing ages to the point where now we're trying to remember things 3 months, 4 months ago, because collectively as a team between the vendor and the entity, we didn't have good rules and processes on what it meant to submit invoices so that it was absolutely clear. Now we're having to look back through time and trying to remember things that happened 3-4 months ago and be able to document them and code them and put them in areas. And it can become very demoralizing to the vendor to have to actually chew through that process. So I definitely recommend any procurement people joining, if you have a recurring invoicing process, state in your RFP how invoicing will happen, and really emphasize connecting the finance teams of both parties early and not just leaving it until the end, because that's almost a guaranteed way to make sure that you're going to have stagnant invoices in your system.
Yeah, I think that's great. So it's funny that you're talking about that from the procurement perspective. When we started the company, we were doing accounts receivable automation for government vendors, and the things that you're talking about from the procurement side of the process, we saw all the time on the vendor side. So the first thing, like when someone said, "Hey, I have this invoice. It's 60 days." Net 60 right now. It was supposed to be paid net 30. And the first thing I'll say, like, did you have the PO number on the top of the invoice? And they're like, well, no. Like, okay, well, that's going to help it get paid faster. Or did you submit your W-9? Are you up to date as an approved vendor? Like, very kind of simple things that a vendor can do to get paid faster. However, I want to make it, known among the procurement people that when a vendor is working with almost any of their other customers, they don't have to do that. And so this is outside of the norm for them. Now you can think about it. Anybody that you work with that's selling to your state or your municipality, they're probably also selling to other customers, whether it's businesses or customers, in their local area. And when they do that, it's probably a credit card transaction. And so it's literally just someone comes in, they swipe the card, they hand them the products, and it's done. And so this is a different process for a lot of these companies, even if they are like a B2B, enterprise sales type company. even then, like there's not a lot of invoice formatting requirements. Most of the time, in the private sector procurement platforms, everything's kind of just moving across on the platform, from the purchase order to the invoice to the payment is all happening in the same piece of software. And so there's not this kind of back and forth and trying to understand what the process is for each of your customers. So when you're selling into the private market, it is the same thing over and over and over and over again. And then that's why there's this frustration, is because then they go to sell to the public sector. There's different requirements, and so they're unfamiliar, and it does feel like it's different depending on the municipality or the public sector agency that you're selling to. So Dustin, you were mentioning it from the procurement side, and I think that's really great to encourage people to be proactive. Connect the payments team with the finance team at the vendor, and to put all of that information in the RFP. And I think from the vendor side, exact same thing. Try and understand what the requirements are, and then meet those, because ultimately that's going to get you paid faster. The other thing that I think needs to be improved, and I don't necessarily know the best way to do this, but the communication, because a lot of times, people would say, hey, we haven't been paid in 62 days and we don't know why. And for us, we ask those same questions. Did you put the purchase order on W-9, all those things? But then it's like, well, did you call them? And they're like, well, we tried and we didn't get them. I was like, oh, just like call them. Like, we'll call them for you. We'll do all these things. And then reach out, and, it also helps foster the relationship a little. And then you can have a discussion and understanding. And so I think, it would be great if there was sort of a unified area where you could say, hey, I saw that you submitted your invoice. It's missing, X, Y, and Z. And as soon as you submit those, we will start the clock and you will get paid in at 30. I think that would be helpful for vendors to do their part on this, because they just don't know what they're missing in a lot of cases. So if you're able to send an update and say, hey, I can't actually process this because of this reason, people like to get paid, so they will likely take the actions required to make your jobs easier in order to be able to pay them.
Well, I mean, I was definitely going to just say that this topic is, I think, a shared responsibility of vendors and public sector entities. I mean, of course, you'll get situations where payments maybe are late because of an overwhelm or a lack of people to process or whatnot. But in our experience, we only serve and only have customers with public sector entities. And to your point, it's going to be very different across municipalities, even municipalities in the same state, across higher ed, across states. And so, we do a client initiation process that used to make sure, or it really emphasized connecting the project teams. And then we've expanded that to make sure that we're connecting the finance teams as a core request that we have. And that is very important, because a lot of times you'll get beyond, you'll be delivering projects, and then if there's questions, there's a lag that's there, because the vendors need to be crisp on how we present invoices. And so I definitely don't want to make it sound like it's only a public sector side. But I'll come back to one of the points we made, like at the start, before we talk about your platform for a minute, which is if you have new vendors, if you have set aside vendors, or you've really emphasized trying to build up like new constituencies, they're going to be the least educated on the processes to actually submit a payment and be paid. So large organizations, they may well want to have an ombudsman who helps solve vendor problems to be able to be a point of contact. But we'll get people lost in this process if we don't take some responsibility for making sure they understand how to not just do the work, but then ultimately to submit and get paid for the work in a way that they want to continue to be a government vendor.
Yeah, and I think it looks like Barry in the comments kind of made the point, right? Like, if we can be efficient here, there's going to be more competition, and then hopefully, again, better execution, better pricing for your procurement office. And to your earlier point, Dustin, I really love the position that Civic Initiatives has taken on this, and like you said, this is everyone's got to work together to improve this process. So it's not solely on procurement, on the procurement office. It's not solely on the vendor. It's a partnership to make this smoother, and then everybody, I think, ends up happier in the end.
Right. Well, we're when we do these change agent chats, several times in them, we're also talking with a partner that we're doing work with. And so we're excited about partnering with you, because I think you guys are doing something interesting. I mean, when I've looked at people trying to help do something about this problem outside of like process improvement, I've dealt with companies that did invoice factoring before and never came away with a great taste in my mouth on like what that characteristic was. I think you guys are trying to come at this in an interesting way, and we want to help you with implementing some of those things when they're bigger or they involve a larger transformation. So, without going into every part of your data sheet on Lunch, why don't you tell us a little bit about like what Lunch is doing and why you're interested in serving public procurement in that?
Yeah, so exactly. We just saw this sort of disconnect in the procurement to payment process, and we wanted to improve it. We just thought that if we can help make it easier to get paid, more small businesses will want to work with their local government agencies or their state government agencies or anything like that. And so, what we've built at Lunch is it's essentially a payments API, but we've done it in a way that no payments company really has. So first and foremost, there's essentially three pieces to it. We have the payments API, and that's for government agencies, and it gives them free digital payments. And there's a lot of different ways to pay. You can do digital check. You can do traditional payments. The one that we've seen a lot, though, is us building an ACH file. So it can be a positive credit push from your city's account, as opposed to someone reaching in and pulling the money out, which we know that most municipal bank systems don't like. So this is a positive credit push that you just send to your bank, and they send the money out. On the other side, we actually have a vendor onboarding portal, so that your procurement office doesn't have to collect a bunch of bank account information on your vendors, because that just makes another data file that you have to secure and keep safe, because it's really sensitive data. So we do that securely on our vendor portal. So this is where the vendors can connect their bank account securely with Plaid. And then we also do KYB, KYC, AML. These are banking security standards. It's actually really easy. We kind of just collect their EIN, much like you would collect their W-9, and they're ready to go, and they can receive those payments digitally. And then the other piece of what we do, and again, that's all free. You can pay for free. Your vendors can get paid for free. There are no transaction costs involved there. But if the vendors elect to want to get paid early, let's say they need to make payroll and they can't wait net 30, they can access financing direct on our platform. And so that's kind of the secret sauce there, which is how we can keep the digital payments free of transaction costs forever, is that we think enough small businesses are going to choose to say, hey, I don't want to get paid in 30 or net 45 or anything like that. I need to get paid today so I can take more business, so I can make payroll, so I can do other things. And so that's available to them directly in that vendor portal. So that's the whole system right now. We're starting to roll it out actually built into a number of procurement platforms as essentially a payment button for the procurement office and a get paid now button for the vendors. And so that's about it. It's pretty simple, but we're really excited to continue to roll this out in different municipalities, school districts, and places all over the country.
Yeah, I mean, what I thought was interesting when we started talking, and then we ultimately agreed to partner in some ways on that issue, is it embeds like a payment methodology, but also with kind of an implied invoice factoring methodology. And for public sector folks who don't know what invoice factoring is, you can take you can say, well, I'm going to eventually be paid by the city of Kalamazoo. Here's the PO. I'm waiting on it. And so I'm going to sell it to somebody for 85% or 90% or 70% of the value, so that I can get some cash flow. So that's me as a vendor selling an invoice for the purpose of getting cash flow, because I'm getting a slow pay. So somebody else is having to kind of stand in the middle. The problem with the invoice factoring is they want a lot of information. It becomes more tedious than the actual process. They want you to sign documents that sign over the responsibility, and it's all very awkward. And so invoice factoring is something that we don't want our vendors to be often doing, because it represents a cost that they're having to incur to do business with us. And so I liked the fact that you basically we're building in effect, an ability to have some form of cash flow that's embedded in the latency in the system. There's another city that we've dealt with that wanted to create a way to do some cash flow creation for nonprofits to be able to say that we can help to fund certain things or make immediate payments in order to create cash flow for these sort of important and fragile industries. And that the solution they were going to do with that was more associated with creating a funding source to be able to provide that. This kind of thing can basically answer the same question without having to create a separate fund within a city, because it's embedded and you're picking up the latency and the amount that you're charging to basically do, in effect, invoice factoring is much lower than what I otherwise saw kind of walking around in the market. So that's why I thought it was different and fresh and worth bringing forward into this conversation.
Yeah, no, I appreciate you bringing that up. We thought invoice factoring was basically broken. Like you said, it takes a long time to get approved, and starts to get very complicated with, a percent per week or whatever it ends up being. And so ours is like, flat rate, 95 cents on the dollar. So we'll buy it. I think the other piece of this is, again, we're really focused on small local businesses. And a lot of times they're locked out of solutions like that. They have lumpy cash flows. Maybe they don't do a ton of revenue in a year, especially if it's a sole proprietorship. And so they go to the bank or they go to a factoring service and say, hey, I've got all of these invoices from my local city hall. How do I access capital? And the bank looks at that small business and says, I'm sorry, you don't qualify. One thing that we realized that by being embedded, in those procurement platforms, like we can recognize when the municipality has taken delivery. And then for us, that gives us the opportunity to say, well, the risk is now shifted. The risk is no longer on this small business. The risk is really, is that city going to pay? And, one of the great things about the cities and municipalities and states in the US is like, they're pretty good at paying their bills, really good, I would say. And so that by being embedded, that enables us to say, yes, they've taken delivery. They are basically committed to pay. This is okay to pay at this point. And so while that's going through the approval process, if the small business would like to access cash flow, they can do that at the touch of a button. And so we think it fixes the traditional problems with invoice factoring, which we never really liked. We thought it was a useful tool, but the way that it was being done previously was not ideal for anyone.
Well, and the main reason I thought it would be valid to include this in a conversation on a channel that primarily focused on procurement professionals is if the procurement professional has never worked on the private sector side, which many haven't, then it may not even dawn on them that this conversation happens. Yeah. Like, I would be very interested to know how many procurement professionals are aware of the fact that businesses do invoice factoring in order to create cash flow. I would say, obviously there are many who are going to know, but I would not be surprised if people didn't know, because it would not click that you would need to create cash flow, because, well, of course the bill is going to pay. Of course it's going to pay. But if it's delayed and it's proven to consistently be delayed, then people go to secondary markets to sell these things, and it's a pain. Yeah. It's a pain. And so I just think it was probably important for public procurement professionals to know that the ramifications of slow pay both affect solicitations in the future, affect reputation, affect the stability of the vendors that we challenge to stay stable, affects the supply chain that they're willing to extend and create. And then ultimately, if it's chronic, it creates a secondary market of resale of our invoices that maybe has never even risen to the awareness of procurement that that's what's happening. So, through this conversation, I'm hoping that maybe it encourages procurement professionals to talk to finance about, what is our strategy to make sure this doesn't affect in the future, and can we do anything in our procurement events that makes people understand how we're going to solve this problem, what we're going to need from them in order to make sure that they're paid, and make a commitment to make that connection so that it's not just the project happening over here and the invoicing happening over there.
Yeah, I think that's great. And I would, I was fortunate enough earlier in the week. So I've been traveling all week. So I'm like kind of a little jet lagged on all these things. But I was fortunate earlier in the week to meet with President Biden's economic team. And they talked about like they want to increase revenue based financing for small businesses. And, I was fortunately in the room. Obviously, there's like, 20 other people in the room. I wasn't just there alone. But I was like, hey, that's literally what we do. So it's good it's good. I love that you're doing this, Dustin, because it's getting the word out about these options. And it does seem to be aligned with, I think people are starting to wake up to the reality, like this can actually help small businesses. And again, by helping the small businesses in your local community, again, what Barry Goldman in the chat said earlier, that's going to increase the competition, get you better execution on the things that you're purchasing. So again, I would love a future where it's as easy for a small business to sell to a government agency as it is for them to sell to anyone else. And I think if we can get there, I think everybody wins.
That's great. Well, good. Well, you're on LinkedIn, of course. So if people are interested in if people are interested in connecting with you, then you're at Cullen Gallagher. I'm going to mangle your name.
No, Gallagher. Yeah, it's a mouthful of Irish syllables. So like, I totally get it.
The guy that used to crush the watermelons.
Yeah,
I mean,
no relation.
Myself, I shouldn't have trouble with that word. So
no, not a big deal.
So you're out on LinkedIn, and then we're going to try to extend some partnering with you on areas where maybe we see public sector entities that are trying to solve, bring a fresh sort of solution to that problem. And so we'll keep this conversation going.
Awesome. Hey, I really appreciate the time, Dustin. As always, good conversation. I always learn a lot when I speak with you. So thank you.
Great. Well, thanks everybody. And this will be available on demand when I end the stream. So thank you for your time.